Welcome back to Lokad. As an industry, oil and gas presents several unique supply chain management hurdles. Now today, Joannes and I will discuss those challenges across upstream, midstream and downstream operations, as well as looking at the methods that we think do and, importantly, don't work. Now while you're here, don't forget to subscribe to Lokad TV and to follow us on LinkedIn. And with that, I give you today's conversation on oil and gas with Joannes Vermorel. So first of all, Joannes, thank you for joining me again. First question, I think it really kind of sets the table, or rather gives a bit of perspective on how we got here. When people hear, okay, Lokad is involved in the oil and gas industry, it's a bit of a surprise because most of the time when you say supply chain optimization, people think about supermarkets, retail, things like that. So much like a previous discussion we had on aerospace, and I asked you, how exactly did Lokad get into aerospace? What was it about oil and gas that drew your attention first?
I mean, oil and gas is, I would say, the very start of pretty much all the supply chains we have. They all start there. I mean, I don't think there is almost any product of any degree of sophistication that doesn't critically depend on oil and gas. I mean, this pen has probably half a dozen of compounds that are derived from oil. This mic, the foam here, this laptop. I mean, pretty much everything. Even this table with the paint.
It's a barrel of oil over there. Yeah.
So, and then energy. The world runs on oil and gas. For the most part. The alternative energies that we have, the only one that can even make, I would say, a dent in terms of the raw supply of energy that we need is nuclear. The rest is just like a footprint at best. And so yes, that's literally the very start of all the supply chains that we have. And over the years, yes, Lokad started with the thing that were most visible, so that's the stores, and then you go back to the supplier, and then the supplier, and then the supplier, and one day you end up with doing like we do right now, also oil and gas company that focuses on the various stages, because this when you say oil and gas, this vertical is absolutely huge.
Well, that's the thing, because you just said oil and gas is absolutely huge. Yet I also know off camera you've said before that in terms of, I don't want to put words in your mouth, but in terms of complexity, it's not that much more difficult than aerospace or retail.
Yeah,
Can unpack that a bit?
I would say, in terms of complication, if you want to be precise.
Let's be precise.
I mean, the interesting thing is that the complexity is through the roof due to the sheer scale. So that means, why do we have so much complexity? Well, if you want to have, let's say, operate an oil rig, it's like a mini city. And it needs everything you would expect from like a mid-sized city, which is literally, we are talking of tens of thousands of SKUs of stuff.
Of everything,
From literally gloves,
medicines, food, shoes,
to aircraft engines. Yeah. They have engines as I would say to produce power on site. They would have turbines that they occasionally use when they want to have like a massive supply of or local supply of electricity, etc. So you have everything from very small things to very big things, and all of it is kind of necessary if you want to keep your operations, and that's true for what is onshore, offshore. Same thing for FPSOs, which are if you want, non-permanent software, non-permanent platform to extract oil and gas. So the complexity is through the roof. The complication, I would say, much less so. So that's a distinction. Yes, the scale is enormous. Yes, the diversity is enormous. But in terms of complication, I would say the products are relatively stable. Yes, it's an industry that evolved, but let's say what you need to supply and have available, it's not fast fashion. It's not like every single quarter you're going to have
a completely new catalog
and whatnot. It's still very stable. And then it is not like, let's say, aviations where you have supply chain loops where everything is reparable, and so you have like a crazy complications with the parts that are currently flying, the ones that are on the ground, etc., and everything, and a big constant shuffle between the part that you repair and put back to the plane, etc. So here it is still mostly, I would say, they do have repairs for expensive machinery, but it's still mostly dominantly a forward supply chain. So it's really they to operate, they need tons of equipment that are consumable, they consume, and in order to make really sure that they have no downtime, they need to have a constant supply of tons of things. So yes, in terms of complications, compared to the scale, it is not very complicated, but it is obviously extremely complex.
So again, just to tease apart there the difference between complication and complexity. How does cost figure into the complexity? So again, if you're talking about parts, again, you made the example of, well, parts are stable in the sense that you know at worst, here are the parts that I will need to fix a thing. It's known. The BOM is known. The quantity you may need or when you need it, you might not know, but you know at some point I will need these parts for this purpose. Yeah. However, the cost of not having those parts are quite different if you're, let's say, working in a repair facility on land and working in a repair facility 200 kilometers out at sea on an offshore platform. So is that how does that fit into it?
It's yet another dimension. So
exactly.
You have complications is whether it is a tight mathematical puzzle where just to think about it is super hard. I would say no, it is not. Complexity is just about the sheer number of stuff. You know, the fact that you have many SKUs, many parts, many sites, many everything. But fundamentally, it's just more. It's again, you're not adding complications. And here we are talking of yet another dimension, which is all the stakes are super high. And that I would say is would be a third dimension. I would refer to that as criticality. So criticality is super high, but as far a supply chain optimization vendor like Lokad is concerned, if you tell me that the downtime costs $1 an hour or $1 million an hour, this is just a parameter. You know, it is obviously very different for the business, but it doesn't change neither the complexity nor the complications. So it's just that the stakes, because then you start thinking in terms of dollars, are so much higher. But fundamentally, this is yet another completely orthogonal concern, which is also indeed very important in oil and gas, is that the stakes are through the roof. It is when you have downtime for pretty much even a small site, we are talking of something that extracts
oil from the ground. Yeah, exactly.
It's the downtime. We are talking of something that is $1 million a day. You know,
I've some sources even
as a
higher.
Baseline, as a baseline.
Yeah, as a baseline. I mean, that range is quite high.
Yes.
And again, it really is worth just unpacking that a little bit, because earlier we talked about aerospace, and I know that like in automotive and aerospace sectors, the cost of downtime for an hour, analogous. So I know automotive can be about $2 million an hour. Aerospace, no reason to think it's any different than that, given the complexity. But again, those typically occur on land. When you start talking about an offshore platform, you have to also factor into the consideration. It's not just buying the parts at the last second. You're also talking about, okay, I need either a boat or a helicopter right now to transport those things. And it's not just the helicopter I need at the last minute. I need a pilot or a captain. So again, I need a person with a very unique set of skills to be available when I need them for essentially a crisis price. You're paying through the roof, because every second you're not pulling oil out of the ground, you're losing the value of the oil. So again, when you talk about the financial stakes, I mean, there's first order, there's second order, there's third order, there's fourth. It's enormous.
Yeah, the stakes are extremely high. But again, for us, you know,
but from
a perspective of supply chain optimization, the fact that you tell me that plan A is get the parts through a boat and low-cost shipment. It will take the time it takes. Plan B is have an emergency helicopter that comes to your offshore platform. And the fact that the plan B costs you 100 times more than the plan A, it's again just a matter of it's the settings of the economic modelization.
Yeah.
So fundamentally, it is not very different from a perspective from just a multi-sourcing, setup where you have one supplier in your country that is cheap, that is slightly expensive, and a more distant overseas supplier that is cheaper. Fundamentally, multi-sourcing for Lokad, from our perspective, it's not a very complicated challenge. But yes, the stakes. What makes really oil and gas very specific is that the stakes, the criticality is like through the roof, and in terms of dollars, you have just very frequently 2 zeros or sometimes 3 more than in most other industries, just because it is so massive.
Well, I really like the categorization here. I've just written down basically 3 C's: the complication, the complexity, and the criticality. Those are, again, 3 dimensions you just described for how Lokad views, or you and Lokad and our supply chain scientists view the problem.
Yes.
Please contrast that with your take on what the traditional approach in terms of supply chain management in oil and gas is. I mean, are they thinking about it at that level of granularity and dimensionality?
I mean, when you think of it, when you use a classical methods like ABC analysis, what you're saying is that you're segmenting everything on criticality, and you're saying, okay, whatever is my most critical items, I will have, let's say, 1 planner per 100 items. So that one person will be dealing with 100 SKUs because those are super critical, and I want this person to be able to really closely and daily monitor all of that. And then the Bs, I would say, maybe I'm going to have 1,000. So 1 person, 1,000 items, lower volume, lower stakes. And then the C's, I'm just making those numbers up. It will be 10,000, and those are the stuff that are less critical, cheaper, etc., etc. So you see, in essence, the traditional way to look at it is just tackling through pure criticality. So you just but the thing where Lokad it's do not really fit is that we want automation. So we want a numerical recipe that will just deal with everything frontally, and machines can do tons of calculations. So we don't have to starve in terms of analytics whatever are the infrequent items. You see, the idea that why don't you have one demand planner, supply and demand planner for every 100 SKUs? Why do you only keep this ratio for the A's, where you can, for the A's items, you can have like 1% every 100 SKU? The answer is because you would need a mind-blowingly large army of supply and demand planners if you were to do that when you have like oil and gas companies to manage 50,000 distinct SKUs for to keep your operation running. So that's that. If we were at 100 items per employee, we are talking of 500 employees just to manage, the inventory of one site, one extraction site. So it's obviously crazy. You're not going to do that. But now, if you enter the realm of automation and you have like smart software logic, then those constraints are completely moot, and this perspective is completely moot. So what you want is just to have something that is very good all the way from your very top, most critical SKUs, but also to back to the long tail, because that the thing with this long tail is that even if things are rarely needed, they can still contribute to a downtime.
So again, just because I want to be mindful of not using too much technical jargon for people who might not be familiar. When you say long tail, you're talking about low probability events on a distribution.
Yeah, exactly.
So like
long
the 0.1% chance,
yeah,
but that could be $25 million of impact.
Yeah, that can be, and those long tail situations can either be we need something that we normally don't need.
Yeah, exactly.
Or It can also be that something that we normally supply in 1 week, easy peasy, takes 6 months. Why? Because,
lead times vary.
Lead time exactly vary. Or other things. So you see, all the sources of uncertainty, your continued operations depend on decisions that are made now, expecting certain future condition of the market. So we expect that we will be consuming this amount of parts. We expect that the suppliers will be able to supply that in that time frame, etc., etc. So there are like multiple sources of uncertainty, and due to the complexity, you can be hurt, meaning you can face downtime just because there is something that had only one chance in 10,000 from happening. You would say, well, one chance in 10,000 is not much, except if you have 10,000 of stuff like that. So you're rolling the dice over and over and over. And at the end, once you roll the dice tens of thousands of times, even things that are like very improbable still manage to happen.
Well, again, this is the idea of probability theory. It's worth planting a flag here, because again, I had a conversation with Simon Shallett, COO at Lokad before. Again, we were talking about scheduling in aerospace. In terms of complexity, the example is valid. And he was talking about how people understand probability theory is very different from what probability theory actually is. So, for example, he gave the example, and you will in real time correct my maths, but like if you needed 100 parts for your to complete a schedule, so I want to fix a thing, I need 100 parts. I need them all to be available. To do it efficiently, I need them all available simultaneously. And if you set 99% service level for all 100 of these, the reaction might be, oh, well, then I have a 99% probability of having all of them available, and it's actually closer to like 65% or something like that.
Yeah.
Like 2/3.
Yes.
And then when you say that to people, it's, oh, really? So then it's...
assuming independence.
Assuming dependency.
Probability distribution. Yeah, absolutely.
But the whole point being, of course, what you think is likely to happen, and even if you start to think the initial steps of probabilistic thinking, it's still a little bit more complex than you would think. But I do want to build, because you did say, the long tail events, maybe 1 out of 10,000, this situation occurs and it will be financially catastrophic. Okay, but the orthodox perspective already recognizes that. Like, okay, well, I might have a long tail event. I might be missing this $1 screw. Okay, I'll keep 1 million of them on hand, and I'll tie up $1 million in inventory that might never get used. So in reality, I mean, people are already kind of aware of this. They already have approaches to it, which is buffer stock. So what's wrong with that?
I mean, if your industry is super rich, there is nothing fundamentally wrong. I mean, it's wasteful because stock costs tons of money. But if you have very nice margins, you can tolerate that. But the reality is that oil rigs and FPSOs have limited storage space. So you see, so at some point, if you just want more, it's going to be on land no matter what, because
and then that's far away.
It's far away because again, your FPSOs it's a very large ship, but it has finite capacity, and same thing for an oil rig. It is like a mega structure at sea. Yes, it's fairly large for a man-made structure, but again, your capacity to just store stuff locally is limited. So you have to make sure that you're really, really making the most of the storage capacity that you have. And then generally the problem of saying, oh, we can just have, sky is the limit for the inventory, is that if you have this approach, you will most likely end up being very distracted with all the dead stock that you carry. So it's not, it is not necessarily such a great strategy for high uptime, because if you do that, you will create huge pile of needless stock, a little bit accidentally. At some point, someone will say it's very wasteful, and then you will be very distracted for months being in the process of trying to liquidate this dead inventory. And being distracted is also a contributing factor to just miss on other stuff, and thus face ultimately an accidental downtime because there are stuff that you need that you don't have. My observation is that it's very rarely when people have usually too much stock, they usually have also less than ideal uptime. It is very rare that super high uptime is achieved by just having a mind-blowingly large amount of stock. Usually having too much inventory creates so many problems that in the end, you're not even that good in terms of uptime.
Okay. Well, to follow up on, and again, I just jotted this down. There's a lot to cover, but one of the things you mentioned was your ability to tolerate excess stock. I mean, it depends on, like, if you've got really generous margins. Well, the thing is, when we're talking about oil, those prices fluctuate quite a bit. And in real time, so we're recording this on April 10th. Brent oil is now $65.48 a barrel. In the current moment, that could rise to 100, it could drop to 25. How do price fluctuations in terms of the actual value of what's coming out of the ground affect companies' abilities to absorb the hundreds of millions of dollars that they're just keeping on the offshore platform and in warehouses and renting helicopters and boats to ferry all of that? Like, how do price fluctuations factor into the supply chain management process?
So as generally, different sites have completely different extraction costs. So and you have places in the Arabic Peninsula where extracting oil is very, very cheap, and so at 65 they're just fine. And there are some places where, let's say, Canada with I forgot the term. It's the sable bitumineux.
Athabasca Basin.
Yes. Where at 65 it is really on edge on what is actually profitable. So
Athabasca oil sands. Yeah.
Yes.
Athabasca Basin.
So those oil sands. So you see, my take is that first the driving force is that depending on the price point, you will keep certain site operating or not. That's like a mega force that define what can operate. Is if you're at $100 a barrel, then you have way more sites that can be operated than if you are at 50. And so that I would say this is like the mega thing that is on top. And then
which still comes at a cost. You're basically saying, like,
yes,
because you're so wealthy, you can afford to be wasteful. Yes. It's not a good practice inherently.
Yeah, I mean, if you can extract the oil for $10 a barrel, and then you sell it at 65, the fact that you have a few extra dollars per barrel of inventory cost floating around, it is something that you can tolerate if the price is at 65, and then when you integrate all your cost, you end up with producing at a cost of 60. When you integrate everything, then you realize that you're suddenly having, plus or minus $1 a barrel of just inventory cost is very, very significant. But still, the thing is, generally, as I said, the problem is that it is not really saving inventory per se. It is more like whatever you can do to have very high uptime. And in a sense, usually having too much inventory is the enemy. It is, in practice, it would be a fallacy to think that just inflating inventory will give you, that would be, some sort of safety stock perspective.
Exactly.
Where you just keep increasing. But the reality is that it will just recklessly increasing so many products that you have to keep in stock, create so many mundane problem for storage and whatnot, that in the end you end up with a lowered uptime, not a higher one. So really the question becomes very quickly, revert back to having the right inventory, take into account all the constraints so that the uptime is really, really maximized.
Well, I kind of want to summarize this little section of the discussion, but I want to do that in a quote that I've written down, and then I'll bounce it off you. You can tell me how accurate it is. Would you say that the oil and gas industry overall, or at least from the supply chain management perspective, does not think financially, and by financially I mean the Lokadian meaning of the term, like maximizing ROI for every dollar that is invested?
I think you see that's morally that's what they do. In the fine print, that's not what they do.
Okay,
that's
tease that apart, please.
So if you ask managers, they would say, yes, that's obviously what we do. Obviously. But then when you look at the fine print of the calculation, it's actually people doing it by hand. And you see that the problem is that when you have a decision-making process that has people tweaking numbers in a spreadsheet by hand, there is no optimization possible. You see, it fundamentally it boils down to a horde of clerks who are hand down. Again, we are talking we are talking of sites that are large. I mean, we are talking of teams that have to manage tens of thousands of SKUs for every site. I mean, this is very complex, and so when you have that many people in the loop and the decisions are made manually, you end up with things that are not very optimized. Even if the top management think in terms of financial optimization, if the base layer of execution of the supply chain are people, tweaking spreadsheets, you will not get optimized results. Just because ultimately, yes, the top manager thinks I want maximal bang for buck. So per dollar, give me invest in priority for every dollar that we invest in the one thing that will increase the most the uptime. That's the logic. Everybody agrees on that, no problem. But then people at the end of the process, when you go at the bottom of the pyramid, you end up with people with spreadsheets, and this is the inside they are handed over, but then they have to deal with a spreadsheet. How do they do that? And the reality is that they will do something very, very crude, especially if you end up with this sort of ABC setup where the guy, there is a person that has like the A's and 100 SKUs and the person with the C's that has 10,000. So my take is that you can only start to optimize if you have a numerical recipe. That's the first thing, is that optimization is not really possible if you do not have a numerical recipe. That will be your baseline. And then what will be better than this numerical recipe? The answer is another numerical recipe. And because it's two numerical recipes, you can run them side by side and do a benchmark.
An automated algorithm.
Yes. A numerical recipe is a collection of algorithms that goes from the raw historical data and all this sort of extra data that you provide to the final decisions, which is what exactly do I need to keep, for example, on this FPSO at this point of time, so that I can have, the best inventory to maximize uptime.
So I want to follow back on something, and it comes back to, I guess, even before I joined Lokad. If you'd said to me, and I mean no disrespect to anyone who works in bakeries or anything like that, but if you said to me before I joined Lokad, how does that small independent bakery run its supply chain or manage inventory? Oh, they just play around with a spreadsheet. Sorry, they use a spreadsheet. Not they play around. They use a spreadsheet. I'd say, okay, sounds about right. It's like 2 people, limited products. That's totally normal. If you'd said to me, enormous aerospace companies or oil companies or gas companies just use an Excel spreadsheet and are not accounting for the kinds of things that you just described, I'd have said, that can't be right. That's way too futuristic and complicated a process to just be using something like Microsoft Excel. Not that there's anything wrong with that, but to accomplish the kind of things you're describing, you need to go beyond that. So my question is, what exactly, in your opinion, is it that's holding back an enormously consequential and profitable industry from embracing the tools that you just described? Again, numerical recipes.
Here, in this regard, oil and gas is just like most of the other verticals when it comes to supply chain optimization. Systems of records will never deliver fancy decision-making processes. That. So all those companies have systems of record. So what are systems of record? That's the ERP, WMS. That's the thing that keeps track of what you have, the inventory movements, the payments, and everything.
Yeah, just records, just raw data.
Raw, and that's like a glorified ledger that contains more than an accounting ledger, but still, it is basically a glorified ledger. Those things, all the vendors who provide systems of records have been claiming and failing for decades that they can automate decisions on top of that. It turned out that it's a very bad idea to even try to do that in a system of record. The software architecture of those software is absolutely not suited to do that. So they end up with vendors end up, I would say, engineering stuff that proves very underwhelming in practice. So pick any ERP of the market, and those ERP should have been named ERM, Enterprise Resource Management System. So pick any ERM of the market, and you will see they all have capabilities like demand forecasting, inventory optimization, and whatnot. So they all have, at least on paper, they have that. And yet people do Excel spreadsheets. Why? Because those capabilities are crap, do not work. People just try them. They see that it's not even close to addressing the problem. And so that's why they fall back on their spreadsheets. So, and here, oil and gas was not really, doesn't have a truly exceptional story in this regard. The same problem has been happening in many other verticals. That was the same problem in retail, same in manufacturing, same in aviation. The problem was really ubiquitous. Those systems of records are fundamental because that's how you have like the electronic counterpart of what is happening in your supply chain. What are the operations taking place? So that's fundamental. But those systems will not and will probably never be extended as systems of intelligence. And I define a system of intelligence something that is entirely geared toward automating a decision-making process. And here, that's just not happening. It didn't happen. Though system of records have been floating around since the late 70s, people have been trying to automate decisions with those, again, since the late 70s. Most ERM, let's call them that, vendors have at least half a dozen of iterations, sometimes failed iterations, on their website about the various stuff that they have tried and failed. And it's not coming from those people. So now the question is that if companies in oil and gas wants to get serious on that, then they need to think that they need to consider the fact that the solution for optimization will not come from those system of records. It will come from something on the side. And by the way, it already does. The Excel spreadsheet is already something on the side. So the reality of their operation, it's the tooling to do this, to support the decision-making process, is already on the side because the system of records itself is just not suitable for that.
Well, this is the thing, because this is a very important point, but just to frame it, I did in the background do a very quick search, and I literally just typed the words ERP, smarter decision-making, and there are endless results. Yes. And the first one, again, I'm not going to give any names, it may be gone by the time this is aired, but 7 financial ERP software solutions for smarter decision-making. Next result, smarter decision-making with ERPs and business intelligence. Now, that's actually the second category. Once you get into BI tools, that's
system
reports.
Of reports, yes.
So again, you've nicely laid out, I think, the distinction between, again, a system of records and a system of intelligence, and then a system of reports in the middle, like analytics of your raw data. But what you have, I think, yet to maybe just unpack a little bit is, what is it about that third class, the system of intelligence, that makes it like irreconcilable with an ERP or system of records? Like, because again, you said, well, you're trying to make your ERP do something it can't do, and it's like you can't get blood from that stone. Essentially, why is that? Because it seems like people are being misled, is what I'm saying.
Yeah, I mean, because you're not tolerant and intolerant to the same thing. If you're a system of record, and there is a calculation that is $1 off, just $1, the accountant will go nuts. It is not allowed. You're not, even if it's, but it's a 1,011 payment, and it was rounded to 1,000,010. Is it a big deal? The accountant will go nuts. It is not even possible, unthinkable. You do not round things even by $1. So in a way, when you're dealing with system of records, you want a complete purity on a long list of things where you're like a maniac. And so it takes a lot of time, a lot of efforts, because you want to have absolute purity in many of the data manipulation that you do. And in terms of latency, you want all of those calculations to be super fast. Why? Because I want to know how much stock do we have right now for this product. I want the information instant. I want to create a new entry instant. I don't want to wait. Everything is simple. It needs to be, calculation needs to be perfect, and they need to feel instant. Obviously, real time do not really exist.
But
they have to
really
feel
quick.
really quick. Decisions, it's a completely different world. Can I approximate something that was $1,010 at 1 million? Yeah, absolutely. Can I just ignore tons of things? Yeah, absolutely. You see, you want to be rough but correct. When you have so much uncertainty, just imagine you're facing a situation where you have super erratic consumption for a part, super erratic lead time for the suppliers supplying the parts. You're not even sure exactly of which price point you're going to get the part, because there is also uncertainty. So you have like 3 uncertainties: the demand, the lead time for the supply, and even the price at which you will ultimately source the thing. Now, you have to decide now, do you want to trigger a purchase request for this many units of this part? You can see that it is, we are not even close to be like 1% precise. It is what is critical is to be approximately correct as opposed to be exactly wrong. And so the system of intelligence is entirely designed in terms of numerical recipes to do that. And that means that you're not focusing on the right things. You will readily approximate tons of things if those things are inconsequential. And in contrast, you will do things that an accountant will never do, which is speculate all the time on things that might happen. A system of records, fundamentally, they will tell you if you purchased parts in the past, at which price point, what was the price point did you pay? It's not going to speculate on the fact that maybe the price point that you're going to pay will be much higher in the future. It's not the sort of things that belong to the realm of records, but it belongs to the realm of system of intelligence.
Yep. So again, if I've understood correctly, again, in the way I would try to see the distinction would be, again, an ERP, it's the difference between a record and a decision. Like a record is just a reflection. There was one pen on the table. I took that pen off. There's been an update of that record.
Yes.
Whereas a decision, should I buy a pen? And how much does the pen cost? Where's it going to come from? What am I going to sell it for?
Yes.
That computationally coming up with a decision is much more involved and sophisticated than just a record of a thing.
Exactly. And you're not even paying attention to the same thing. From a system of records, you're really looking about the past, and you want to have perfect, accurate recall of the past. Yep. And things have to be clean, compliant, and whatnot. Let's just consider for a second what it means. I need to purchase a part that comes from China. Exactly. I don't need it now. I need it in 6 months. Should I buy now with a crazy tariff? Or do I think that the thing will have settled down? Or do I think it will be even more crazy and I will end up with a 200% tariff? whatever. So you see, it's the sort of situation, the sort of of things that do not belong to a system of records. You're going to drive your auditors and accountant nuts if you put this sort of stuff in the system of records. But as far as the system of intelligence is concerned, yes, this is exactly the sort of things. You see, the focus is really not you're ready to approximate tons of things that are inconsequential. So you don't need to have the transactions to the last, dollar. You have plenty. If you have plenty of tiny costs that are real but can be neglected, because we are talking of something that in the end is going to be less than 0.1% of the total cost. Again, an accountant cannot ever say, but it was just a $20 spending. Frankly, we should not even be recording that. No. From an accounting perspective, yes, it was just $20, but you record that, even if it was the stamp to get a $100,000 shipment out of the door. But again, from a system of intelligence, you're saying, okay, I don't care about this thing. It's like literally inconsequential. It complicates my logic for nothing. I really want to have my logic focusing, my numerical recipe focusing on the big stuff, the stuff that is really consequential. And due to the fact that my numerical recipe should not be a monster, so it should not be thousands of lines long, completely incomprehensible, I need to focus on what really matters, ignoring what mostly doesn't matter. There is a limit to how much sophistication you can put in this numerical recipe before the thing collapses on itself due to the fact that it's not maintainable.
Just before we push on, I do want to again drop another pin there, that when we talk, we're not downplaying the value of a system of record. Obviously, that is critical.
Yes.
And a system of reports, very, very useful. So the nomenclature is simply just to differentiate. When we say intelligence, it doesn't mean the others are dumb. It's just that's the function. A system of intelligence produces decisions.
But I would argue that it is very dangerous to not have a dumb system of records. You do not want to have something smart and clever. Just ask an accountant and tell him, you know what, your colleague, he's doing very clever things in accounting. It's extremely imaginative and smart.
I think there are borders where there are people saying that.
Is like, will be terrified. What? Imaginative accounting? No, thank you. I would prefer it, to be like super dumb and readable. And yes, there are many rules, but they are like super basic. Don't get me any kind of fancy creativity here. That's again, a system of records has to be the electronic ledger. So you really want to minimize the sort of sophistication. Is not something appropriate for system of record. You want this thing to be super dumb, super simple, as simple as you can make it, because it is not the right place to engineer sophistication.
Well, if I were to summarize a lot of the commentary so far, it basically reads like risk aversion is very common in oil and gas, but there are two forms there. There's risk aversion when it comes to inventory, which makes sense considering the criticality and the financial stakes you described. But there are also, if I've understood you correctly, and I think I have, there's also a lot of risk aversion when it comes to even software choices to address the first class of risk aversion. So I don't want to lose lots of money, because that's not what I'm in this business to do. So I'll keep lots of stock on hand. Okay, well, here's a piece of software that is designed to address that issue. No, I'm also risk averse about using that. It's like, how do you, in your opinion, how do companies reconcile those two forms of what are surely, at face value, conflicting forms of risk aversion?
I think the problem is slightly, it's not framed exactly like that. Oil and gas companies are, I think, at heart, engineering companies. That's companies of engineers. Those are very technical challenges. And the reality is that the engineering problems that oil and gas extraction, transport, distribution represent, the engineering problem is extremely interesting. This is very complicated. And so I would say you end up with a situation which also is a problem that faced by some other verticals, which is it is very easily to have all your best and brightest engineer doing the things that are the most interesting thing, which is, invent the technologies so that you're able to extract new sources, think of new technologies to operate everything, to transport, to everything. So you see, supply chain is also an engineering discipline, but when you have something just next to it that is like super shiny and bright and extremely attractive, you can end up with a situation where those companies struggle a little bit to get the talent they really need on the supply chain front. And the problem is caused by the fact that there is a lot of interest for the core oil and gas, engineering changes that are distracting people aware and companies a little bit aware from the supply chain changes. And again, that is something that is not unique to oil and gas, but I think it's something that tends to impact all those, I would say, tech-heavy verticals. Semiconductors would be the same. To some extent, fashion would be the same, because if you're in the fashion industry, your interest is in fashion, not supply chain, etc. So that's typically the sort of verticals where people who join this sort of verticals, I would say, might be more inclined into, if they are they have a sort of technical inclination, they would be more inclined into tackling the core challenges of this domain, as opposed to tackle the supply chain sub-challenge of this domain.
Well, having said all that and taking all of that into consideration, do you think then it is feasible and or realistic, so you can choose what you prefer, feasible and or realistic to expect that supply chain in oil and gas supply chains will ever be as agile or as proactive as in other verticals, for example? Because again, like the ones you listed.
I mean, first, the scale makes them by design more rigid. The bigger you are, the less agile you are. That's just a given. You can try.
But there are degrees.
Yes, but you can try to mitigate the problem. Amazon is famously known for being quite good to not being a complete bureaucratic nightmare, despite being very, very large. But still, it is very difficult when you're super, super large to preserve agility. And here, this oil and gas is literally, there is no bigger industry. It is, we're talking of a project start at 1 billion. I mean, it's the things are extremely large. So in terms of agility, it is okay to, it is not even, I would say, a realistic perspective to say oil and gas is going to be as agile as, let's say, e-commerce players. It's just, it is not a reasonable baseline. But they could become a lot more, I would say, considering the proper baseline, they have a massive room for improvement. And again, I believe that with the fact that nowadays most of those companies are digitalized, so what they have is that they have those systems of records in place. They have already done the big investments to start optimizing. And the interesting thing is that they very frequently made originally those investments for system of records, thinking that they would get a system of intelligence at the end of the journey. The reality is yes, but typically not with the same vendor. So you see, the reality is that yes, your system of records is a foundational building block to later do the optimization, but you're not going to do that in the system of records. You're going to do that on something else in a system of intelligence, and most likely it's going to be a different vendor.
Again, if I can just unpack there, the degrees of agility. So what I meant by that question, or rather how I would define agility, would be, with an example, you have a system of intelligence that is able to react in semi-real time or quite quickly, I think is what we said earlier, quite quickly to, let's say, the current state of your supply chain. Take an example, I don't know, you're performing repairs on the offshore platform. The the bill of repairs you think you know, but it's variable because you suddenly find, oh, there's actually a problem I wasn't expecting. Okay, it's there now. Am I prepared for that? Yes or no? I have a schedule of repairs ready. So I have the technicians, I have the tools, I have the parts. But what I thought I was going to have to do, I can no longer do because, well, actually that thing which I don't have the parts for right now is broken. What do I do? Under my understanding, an agile supply chain would be, for example, one that has software that could regenerate a system of or a schedule of actions. Might not be perfect, and again we get into the idea of like perfect doesn't exist, but would be better than something like, well, throw our hands up, just go with FIFO, whatever, figure it out.
But the reality is that if you have humans in the loop for your decision-making process, especially if there are many humans involved, it's going to be slow. It's going to be slow. Just imagine, right now we have a situation where tariff in the US have moved considerably. Okay. Now imagine you have hundreds of people involved, and they will need to update their spreadsheets to take into account the new situation. If you proceed like that, you will shoot. Okay, top management has noticed that. They will shoot an email to everybody and say, "Hi guys, I think you've all been reading the news. Here is an update on the new situation. Blah blah blah. Just update your practices to reflect the new reality with taking those numbers as as inputs." But the reality is that it's going to take time. People have their spreadsheet. They can be complicated to update. It's not centralized. Some people may not be really paying attention. Some people might generally be already fighting so many fires that they just don't have time to deal with that, etc. So if you generate your decisions with people in the loop, then it's going to take 6 months, no matter what, to bring everybody up to speed. And when you consider the speed of change of the tariff in the US with regard to the rest of the world,
hour by hour,
yes, clearly having like a 6 month horizon for getting your very diverse teams up to date is it's just going to be extremely slow. So yes. That's one of the reasons why Lokad advocates those numerical recipes is that you can, in let's say a day, update the numerical recipe, take into account the new whatever is the new reality, test
new state
it,
of your supply
chain, and then it goes to production, and all the decisions that you take onward are now reflecting the modified recipe, which may include the new tariff or whatever is happening currently.
Well, again, I realize that while we've discussed this, we have implicitly and occasionally explicitly focused on upstreams, and we were talking about extraction and offshore platforms. But everything we've said here applies across the board. So upstream, midstream, downstream, etc. Like there's nothing, or is there anything uniquely different about midstream and downstream supply chain in oil and gas that would make it perhaps more suitable or more amenable to the kind of software interventions you're describing, or is it's all the same, turtles all the way down?
Yeah, it is very, very similar. I mean, obviously, once you got into transport, there is tons of people who are really traders, who are really evolved. And by the way, it's interesting because they don't consider themselves supply chain, but from my perspective, pricing is part of supply chain. For me, it's interesting because those things are completely automatized, robotized already. And so we have those quants that are dealing with this part. So the interesting thing is that when it comes to speculating on the goods themselves, buying it and setting the market price, those things are already completely, I would say, software driven. So that's interesting. So that's the upstream where there is the bulk of the physical complexity.
Very asset heavy.
It's still, I would say, under instrumented when it comes to system of intelligence. That would be, the big differentiator.
Well, we're kind of winding down here, but what I would say is, based on what you've just said, under instrumented. I like that phrase. Realistically, no one's going to go from, a completely orthodox classic approach to managing, again, let's just say their upstream supply chain, to well, it's completely robotized from start to finish, excluding Lokad's clients. But for people who want to start taking those steps, those first steps, what does that look like in terms of software?
I mean, software, it's just dual run. So you see, the way Lokad approach those sort of situation is you establish your numerical recipes, and initially people just keep having their spreadsheets, but they just have on the side what Lokad, the numerical recipe of Lokad recommends. And they can compare and they can decide which one is the best. And Lokad is not just decisions. We also, as part of the white boxing effort, we provide explanation in dollars that justify. So every decision that we recommend comes with typically half a dozen of performance indicators themselves in dollars that explain why we think that is needed. So that could be the cost of what you're about to buy, the cost expressed in extra uptime that you're earning that is there.
It can be uniquely tailored.
Et cetera, et cetera. So you would have half a dozen of performance indicators in dollar that motivates, the plus and minus, that motivates what we recommend. And then we iterate, and at some point, that's the way those numerical recipe graduate to production. Lokad, the way we think is that when supply chain practitioners says, well, today I've just validated all your decisions just like yesterday and the day before, because frankly, they're just good. I don't see any added value.
Having a team tinker with them.
We have fixed the problems. And so, you see, it's just, we have this. And the interesting thing is, because you have automation, you're not asking your teams to work twice as hard to generate first the decisions with your spreadsheet, with a semi-manual process, and then do it in a second system also with a semi-manual process. That is just a nightmare for the team. So the idea is, no, you want the new system to be completely automated, robotized, and then you can run that, do what we call dual run for as long as it takes, typically a couple of months, until people are like very reassured that those things are solid, that they're good day after day, that they make actually much fewer mistakes than people. When people start to say, oh, the system disagree with me, oh no, I got the lead time wrong. The recipe was correct. You see, and then that's a situation where then you just decide to automate.
And also, it should be pointed out that, again, any of the supply chain practitioners client side, they're able to interact with the supply chain scientists in charge of that account, and collaboratively that does help to improve the numerical recipe to factor in their insights, because again, no one's making the claim that there's no value to what resides inside the head of a supply chain practitioner, simply that let's leverage that and maximize the return on that investment through scalability and automation. I think I heard you say that once, Joannes. Well, Joannes, I have no further questions, but as a terse closing thought, any call to action you want to share?
I mean, it's the world of oil and gas is literally the foundation of our industrial civilization.
And it's not going anywhere.
It's not going anywhere. Yes, no. It's despite the claim that there is peak oil and whatever. No, it's there to stay. It will stay for a long, long time. And even if the world managed to transition to nuclear energy for the pure energy thing, it turned out that there are plenty of cases where it's just not very appropriate. If you, for example, electric planes we don't even have anything in terms of technology that would make that work. Same thing for example, foresting. You need very heavy duty trucks to do that. Those things are not going to run on batteries.
And where would you charge them?
That's true for most of the heavy equipment that we use for agriculture, for mining, for tons of things. Those things depend on oil, and then there is just also the plastic that we need for tons of things. And unlike what the media is saying, we have too many plastics with packaging. Yes, but most of surgical instruments are also made in big part in plastic. So yes, it's not going to be anywhere. And I think so that's that this industry is also having an engineering mindset. If I were to make a slight guess about what coming in the next decade, I would suspect that this industry is also going to take the train of AI and just automate tons of clerical back office tasks. I mean, that's what we're talking about here.
Exactly.
Just there is this industry employ literally hundreds of thousands of clerks doing back office jobs. They are absolutely needed because otherwise those companies will grind to a halt. But there is an enormous potential to just mechanize that and free those people that they can do more interesting things.
Well, Joannes, I share your enthusiasm, and I certainly thank you for your time, and I thank you all for watching. See you next time.